Hi friends, welcome to A to Z Learning channel. Today we are bringing you this video where we'll talk about the merger announcement which was made on 4th of April that the two stalwarts of their respective industry, HDFC Limited and HDFC Bank, both will be merged into one entity, and that entity will be HDFC Bank. A lot has been said since this announcement. Number of analysts have analyzed it and commented on this merger and provided their side of story. If we purely look at the performance of the stock in the stock exchanges, then I think on the day of announcement it was seen as a like mind-boggling announcement, and both stocks, HDFC Limited as well as HDFC Bank, went through the roof. They both went up quite significantly on a single day. But since that announcement date, the stock hasn't really performed. Stock has been consistently losing its market capitalization. Both stocks are now, from last a week or so or 2 weeks, they are in the kind of consolidation phase where HDFC Bank stock is somewhere in the range of 1300 to 1400, whereas HDFC Limited stock is somewhere between 2200 and 2300. So what has happened? Does it mean that the announcement, which was seen as a golden news, is actually not as good as it was thought on the date of announcement, or what has happened? We thought we'll bring a simple video to help you understand what was the management rationale and anything to do with that news, and in the process provide you with our own review and assessment on this merger so that you can make an informed choice whether it's a good or bad merger. So without any further, let's commence our video. So as I said that on the date of announcement, it was like India winning the final in Mumbai in 2011 when Dhoni hit the six and India won the World Cup. Both stock performed outstanding. They both kind of grew by over 10% in a single day. So it was seen as a great news. But since then, the stock has lost its value, and it has gone down to the more at the kind of low end of the range for both HDFC Limited and HDFC Bank. So let me first remind you what was the management rationale when they announced this merger. They said that this merger is going to create a large balance sheet and net worth that would allow greater flow of credit into the economy. It will also enable underwriting of larger ticket loan, because right now, given the size of balance sheet, there's only so much underwriting the bank can do. But with this merger, the size of the balance sheet and net worth will be increased quite significantly. It will have the ability to underwrite large ticket loan, which are going to be essentially funding infrastructure loans, which is an urgent need for the country. So that was one main rationale expressed. It was also mentioned in the announcement that HDFC Limited is a significant provider of home loans in the affordable housing space, which is the priority of the government of India. And with this merger, HDFC Limited will be able to access the low-cost deposits that are available to a bank with a high CASA ratio, which will be the case in the case of HDFC Bank. It will bring down the cost of funding to service those loans. So there is a greater opportunity for a combined entity to fulfill or to provide those loans at a more reasonable rate, those who are willing to kind of look at affordable housing space. And the last thing that management highlighted in terms of the rationale for this merger was this that the bank's kind of predominant presence and a network of over 6,000 branches, and most of those branches were in semi-urban rural areas, gives greater opportunity to HDFC Limited to push their product, push their affordable housing loan product in those parts of India which have been not properly serviced in the current structure. And again, that's PM Awas Yojana is the kind of key program that Government of India is supporting. So all this was kind of seen as a greater good for the economy, greater good for the agenda that is set out by the Government of India. So that was a sort of management rationale in terms of highlights. Now let's look at, since the announcement, because the stock price hasn't performed quite the way probably management thought it would do, what are the kind of implications? There must be something bad. That's the reason stock price hasn't performed. So let's first kind of unpick what are the implications of this merger on the depositors as well as the borrowers of both the entities. So first, let's kind of look at the HDFC Bank depositors and borrowers. In the process of this merger, the way it has been announced that HDFC Limited will be taken over, merged into HDFC Bank, HDFC Limited would cease to exist as an independent company. So therefore, if you are a depositor or a borrower from HDFC Bank, there is absolutely no impact on you going forward. But if you are a depositor with HDFC Bank, HDFC Limited or borrower with HDFC Limited, then you need to look at certain things. For example, let's understand from a depositor perspective first. As an HDFC is in a non-banking finance company, therefore they pay a higher interest rate to their depositors. When HDFC Limited would cease to exist, and these deposits will be absolutely honored on the date of merger, and they will continue to earn the agreed rate of interest until these deposits are up for renewal. So some people opt for auto renewal facility, and I think that's the part depositor need to be watchful of, because the bank's arrangement usually is that the deposits are automatically renewed for the same duration for which it was originally booked at the prevailing interest rate. So prevailing interest rate, because it will become part of the HDFC Bank, most likely is going to be a lower rate, because even if you compare today, a deposit of 1 year or 2 year or 3 year or any period for that matter, any tenure, HDFC Limited pays roughly about a percentage point higher than the what you earn at HDFC Bank as a depositor. So chances are that as the bank HDFC Limited will merge into the bank, the depositors deal, when those deal will come for renewal, they'll be renewed at a lower rate of interest. So, and that's the piece that depositors need to be watching out. Maybe they need to disable their auto renewal facility so that it forces them to look for the best deal, best tenure before it get automatically renewed. Now let's look at the borrower side. I think there is a good news for the borrowers. Currently, HDFC Limited borrowers, say home loan borrowers, they take the loan at a slightly higher rate than the generally made available by the banks. With this merger, HDFC Bank will be able to bring down the cost of raising money. Therefore, chances are there is going to be an opportunity for the borrowers as their current deal expires. They'll have the opportunity to renew the borrowing arrangement at a rate which will be more competitive and lower than the offered by any non-banking finance company. So it's going to be good news for borrowers as far as we see the future. What are the potential issues? I think HDFC Limited bring with itself a large book of business which is in the agriculture space, and the one issue that I foresee or we foresee at A to Z Learning is that this will bring down the CASA ratio of the HDFC Bank from current level of 45% to more like 35%, which is a significant reduction, and that's a potential issue. If you are an investor in HDFC Bank, you need to remain patient with the bank and its performance for the shareholders. The other issue that I foresee is this whole HDFC Limited owning HDFC Life business. In the recent past, when Axis Bank wanted to acquire Max Life business, they were denied. Their request was rejected by the RBI. So this HDFC Life being part of HDFC Limited, or HDFC Limited having a significant shareholding in the HDFC Life business, could also be a potential issue as the regulators look at the merger application. Now let's look at the potential benefits. I think clearly the management has set out a very strategic rationale in terms of uh, fulfilling what the agenda Government of India has set out, and generally speaking, improving the credit growth in the economy. I think those things are absolutely there. But in addition to that, I personally see that there are huge cross-selling opportunities with this merger. For example, one data point to share with you is that 70% of HDFC Limited's home loan customer do not bank with HDFC Bank. So that's a massive opportunity that HDFC Bank could have, that they could um, sell their deposit product, their bank account products to bring those customers onto their books. So that's a big opportunity that they have. The other opportunity, if you look at from the other side, is that only 7% of the HDFC customers, HDFC Bank's customers, take home loan from HDFC Limited. If it all becomes part of one big family, one entity, then again there is an opportunity that as HDFC Bank provide customer solutions and services, they'll be able to kind of provide everything that is needed by the customer. So customer will have one-stop solution available with HDFC Bank. So that's another potential benefits that I see with this merger. And don't underestimate, that's a huge benefits. So where are we in terms of 2 months have passed? Uh, when are going to know whether this announcement is actually going to be approved or not? So the current state of play is that the application of their merger is still with RBI. RBI as a banking regulator is reviewing it, um, and they haven't really commented on it. So until they comment in terms of if they need more information or if they're looking for any changes or they approve as it is currently proposed, we have not heard anything from RBI on this as yet. However, there are some positive commentary, positive, I guess, media coverage based on the interviews that the HDFC Limited and HDFC Bank's management teams are giving. For example, HDFC Bank's management has recently said that their application for this merger follows exactly the same structure that RBI has asked for. So if they delivered the structure, what RBI was all along asking them to do, then chances are that its approval is just a matter of time. This merger approval is just a matter of time, and we should not see any surprises. But again, this is all media news. We don't know what will be happening. So current state of play is basically that we continue to play the waiting game in terms of what the RBI's view is on this. So I hope this quick, simple um, uh, uh, video on the merger news and where we are currently and what it is, what are the good part, what are the bad parts here in this merger from a depositor or borrower perspective, the likely benefit for the new entity has been helpful to kind of help you understand about this whole thing that is going on with this merger news. We would really look forward to your comments. If you think we have done a good job in terms of this video or putting together the content, then please do press the like button and let us know. Please do give us comment if you feel that we have missed something important here or you have an alternative view, or even if you agree with our view, let us know through the comments, because those are the necessary I guess, motivation that we need to kind of continue to do a good job for you guys. And last but not least, if you've not subscribed our channel A to Z Learning yet, please do subscribe and become part of our viewers family. Thank you so much for watching our video. Good luck with your information and knowledge journey.